If you have bad credit and you can get your hands on a 5% deposit, then stop what you're doing at once, because yesterday I received this email. Hi Josh, huge news. We've slashed our rates and introduced our highest ever LTV. Just to confirm, LTV stands for loan to value. Increased our max loan sizes and reduced our stress rates. Residential just became a lot more affordable. Key product changes: rates from 4.89%, a huge 0.70% reduction. Max loan to value now 95%. Just to be clear, 95% loan to value means 95% mortgage with as little as a 5% deposit. Absolutely massive news. Max loan increased from 2 million to 5 million. Stress rates on a 2-year and 3-year product reduced to 1.25%. Now, some of that you might not know what it means, and that doesn't matter. The key thing that I want to speak about today is the max loan to value is now 95%, meaning if you have a 5% deposit and you may have some bad credit, this could be a great option for you. So now that I've shared the email with you, I just really wanted to emphasize that 95% loan to value, so a mortgage with a 5% deposit, it's fairly unprecedented in the bad credit mortgage space. I'm really excited to share this one with you, so make sure that you stick around. So before we go ahead and jump in, let's take a quick look at who Precise Mortgages actually are. So like we normally do on this type of video, I went ahead and asked ChatGPT. Precise Mortgages is a UK-based specialist lender offering a range of mortgage products. They cater to customers who might not fit the criteria of traditional mainstream lenders, such as self-employed individuals, those with complex incomes, or people with less than perfect credit histories. Their product offering typically includes residential mortgages, buy-to-let mortgages, and bridging finance. Precise Mortgages is known for its flexible lending criteria and willingness to consider applications on a case-by-case basis, making them a popular choice for borrowers with unique financial situations. I would absolutely agree with that summary. Precise are one of our most frequently used lenders, and a few of the key things that stood out there to me that I would absolutely agree with: for people with less than perfect credit, unique financial situations, and the other one that really stood out to me, things can be referred on a case-by-case basis, making them a really good option for a lot of our clients. So with that being said, let me quickly share with you something that I pulled from Precise's website that I think summarizes quite nicely about some of the features and mortgage products that they offer. Highlights and features: limited edition rates from 4.89%, range of fee options from £0. Product fees can be added to the loan. Remember, a product fee, if you've watched our previous videos, this is a fee that sometimes a lender will charge for setting up the mortgage. Most lenders can add it to the loan. Precise Mortgages here are saying they will allow you to add it to the loan. Core rates from 5.09% up to 95% loan to value. Remember, that's with a 5% deposit on tiers 0 to 3. We'll come on to what tiers mean shortly. Up to 85% loan to value tier 4, 80% loan to value tier 5, loans from as little as 25,000 up to 5 million. This is a really key piece of information here. CCJ's defaults, mortgage and secured loan arrears, active and satisfied debt management plans, and unsecured arrears accepted. Wow, that is quite the list that they can potentially accept. Who's it good for? Anyone moving home, remortgaging, new build purchases, first-time buyers. And when they are saying to use their residential range, customers looking for an alternative to high street lenders, that's certainly a lot of our customers. Customers with adverse credit history, again, a lot of our customers. And self-employed customers with only 1-year accounts. Quite a good piece of criteria that. Most lenders will want at least 2 years, some will want 3. There are a select few that will take as little as 1, and Precise are one of those lenders. Let's now take a closer look on the specific types of adverse credit that Precise will accept. Now, what we're going to be focusing on today's video is Precise's tiers of 0 to 3. And that's because tiers 0 to 3 are the only tiers that offer their 95% loan to value range. And again, 95% loan to value means a 95% mortgage with a 5% deposit. So for the purpose of this video, that's what we'll be talking about today. So acceptable adverse, it's saying here defaults, county court judgments or secured arrears. When they say secured arrears, what they're referring to here are things such as mortgage arrears or a second charge mortgage, which is a mortgage that kind of just sits below a traditional mortgage. Secured arrears recorded for 3 months before application are not accepted. So basically they're saying if any of these things have fallen in the last 3 months, they will not accept that. So tier 0 product. Tier 0 would be classed as Precise's sort of premier product, meaning that you'll probably get the most competitive interest rates and products in the tier 0 range. So it's saying no defaults in the last 0 to 24 months and no county court judgments in the last 72 months. So if you've had any of those things in those timeframes, you're not going to qualify for a tier 0 product. It's saying here mortgage and secured loan arrears, you're not allowed any in the last 12 months, but you are allowed one in the last 36 as long as it hasn't occurred in the last 12. And it's saying here about unsecured arrears as well. An unsecured arrear is just a late or a missed payment, a credit agreement that's in arrears. And it's saying here you're allowed one in the last 12 months or two in the last 36 months. On to tier 1 and tier 2 products. So just like tier 0, you're allowed 0 defaults in the last 24 months. Where it does differ quite significantly is with the county court judgment, the CCJ criteria, because it's saying here 0 in 24, whereas tier 0 is 0 in 72. So that's 2 years versus 6 years, quite a big difference there. Mortgage and secured loan arrears, that's identical as tier 0. And what this is saying here is on the unsecured arrears, this is quite important. They don't have a set limit on it. It's not counted, but it could affect the credit score. And I will stress this point because you've seen how we've talked about lenders that credit score and lenders that don't credit score on previous videos. Precise are one of those lenders that do credit score. So irrespective of any of the criteria that we are looking at today, you will still need to pass the credit score. So on to tier 3 and tier 4 products. This is saying that you're allowed 2 defaults within 24 months. So again, quite different from the tier 0, tier 1 and 2. You're allowed 2 defaults here within the last 24 months. It's saying as well that you're allowed a maximum of £1,500 worth of defaults within the last 12 months. But as long as it's outside of that time frame, they're not going to get too hung up on what that looks like. County court judgments, they're saying you actually allowed 1 even if it's within the last 24 months. They're saying you're allowed a maximum of £1,000 worth of county court judgments even if that's within inside 12 months, or £2,500 within 24 months. If it's outside of that time frame, they're not going to get too hung up on it. Mortgage and secured loan arrears. This differs slightly from the previous tiers that we've covered. And what they're saying is you're allowed 1 in 12 months, but you're allowed 3 within the last 36 months. And again, unsecured arrears, they're not counted towards any criteria, but it could affect the credit score. So just remember, you will still need to meet a credit score. So just before we move on from this completely, you'll see tier 3 and tier 4. They're rolled up in the same piece of criteria here, but only tier 3 is allowable on the 95% product range. And I'll just explain how that works. They will be scored differently when you apply for an agreement in principle and when you apply for the full mortgage application. So even though all the criteria might work on the tier 3, when they run it through the system, dependent on the score, that might qualify you for a tier 3 or it might qualify you for a tier 4. If you qualify for the tier 3, then you can have that 95% mortgage product. If you qualify for a tier 4 or 5 or anything worse than that, then unfortunately you wouldn't qualify. So now that you know a little bit more about the different types of bad credit that Precise can accept and how the different tiering systems work, let's go ahead and take a look at some of the potential rates and mortgage products that you might be offered if you do qualify for these mortgages. So just remember, all of the rates and all of the products that we're going to be looking at here, they are based on what is happening in the market as of today. So if you do watch this at a later time, the products might not be here. Just wanted to make that clear. All of them are also based on the 95% mortgage products that we've been discussing throughout the majority of the video. So onto the tier 0 product range, you've got two options really. They're saying there's a 2-year fixed and there's a 5-year fixed. The 2-year fixed starts at 6.34%. The 5-year fixed starts at 6.44%. There is one with a higher interest rate on the 2-year fixed at 6.74%. And again, there's a higher interest rate at 6.59% with the 5-year fixed. And you will see here, the higher interest rate comes with no product fee. The lower interest rate comes with the product fee. You might be thinking, which one is best for me? I don't know without reviewing your personal circumstances. So the main thing I would stress is it's going to be what's right for you, or what's right for the person is going to be different for absolutely everyone, depending on things such as how much money you're borrowing, how long you're taking the mortgage out over, these types of things. A qualified mortgage advisor will be able to give you guidance on this. So looking at the tier 1 product now, you'll see here the 2-year fixed starts at 6.49% and the 5-year fixed starts at 6.59%. If we go ahead and we look at the tier 2 products, the 2-year fixed starts at 6.64% and the 5-year fixed starts at 6.74%. And then finally onto the tier 3 product, which is the highest tier that you can get with a 95% mortgage with Precise. The 2-year fixed starts at 7.19% and the 5-year fixed also starts at 7.19%. So there you have it, Precise Mortgage's brand new 95% loan to value mortgage range. Now, like always, this isn't going to be perfect for absolutely everybody, because what will happen is your case will be assessed upon multiple factors such as your employment status, your nationality, and your income, your expenditure, as well as your credit history and all the other things that we've covered today. But hopefully for some people out there who do have a 5% deposit and you may not have the perfect credit history, it will be a great option for you. So if you do have any questions or any ideas for future videos, please feel free to pop those in the comments below. Alternatively, you can send an email and the email address will be in the description. Thanks for watching. Please make sure that you hit the subscribe button and you turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.